Hey folks, time for another late night video. I really haven't planned out my home layout here because my kid's bedroom is literally right next door to my office, hence the whispering. So today I want to talk about the Death Cross and why it is utter poppycock. It is utter BS. So you have to understand that pretty much everything you see on Google when it comes to crypto and trading is all sort of regurgitated crap from journalists who don't know how to trade, and that's why some trader somewhere will say, "Oh, there's a Death Cross coming," and then people pick up on that, but it's absolute rubbish. So what exactly is it? Well, first of all, it's just simply a moving average crossover. So a lot of the institutional money looks at the 200 moving average, simple moving average, and a lot of people also look at the 50 simple moving average. Now, for decades, not in crypto, but with equities, many fund managers for decades have gone, right, when the market is above the 200 EMA, I'm going to buy, or SMA, I'm going to buy, and when it's below, I'm going to sell. And then a lot of people, the market's developed quite a lot, and there's just more people understanding trading these days. But basically, it's just a moving average crossover, and it is such a lagging indicator. If anything, I would treat it as an inverse indicator. So what does it look like? It basically looks like this. When the 50 moving average crosses over the 200 moving average, that is what bloody journalists and Twitter calls the Death Cross, and it's rubbish. So they're saying once you get that little cross, it's game over. No. I mean, look at this. By the time that's crossed over properly, the price is here at $7,000. The price has already crashed from sort of 20. This is back in 2017. So I'm going to show you here. If you were to buy on the Death Cross, guess what? You would then be underwater. Maybe. It goes sideways. But yeah, you would be underwater big time. And the inverse is, hey, it's the golden cross or whatever. And so this way you should buy. Now, if anything, I would only use the golden cross, as in when it crosses to the upside. If you were to then buy, somewhere around here, then yeah, it's alright. It doesn't really matter too much if you're late into a bull market, but you must not be late out of a bear market. So yeah, golden cross, fine. It's just a moving average crossover. Here we go, another supposed Death Cross. If you were to sell, you'd be selling around here. Okay, that one's not too bad. But again, look at this. You'd be buying here and then it crashes. It's just rubbish. And also these crosses don't work in ranging markets. So what you'd have to do is just zoom out a bit and just draw sort of range bands and go, right, market's ranging pretty much. I'm not going to touch anything until it breaks above this level or breaks below this level. And then obviously Bitcoin does its thing. But look, if you had that sort of Death Cross back here in 2021, it's already too freaking late. Bitcoin's already down at 37k. It's already crashed from 64, 69-ish, 65-ish. So it's already too late. And what we're having here is just whipsaw. So impending Death Cross, yeah, just treat it as an inverse indicator. So if anything, you should go long. No, in fact, if anything, if you learn anything from this video, never use the Death Cross or the golden cross. There are so many better things you can do. This is just stupid Twitter. Anyway, hope that helps. Toodles.